Hello guys, thank you very much for joining me, and if you're new to the channel, I'm really happy to have you with me. My name is Colin and this is Colin Talks Crypto, and this is the second video in my newly created series where I have created my own Bitcoin Bull Run Index, and I'm calling it the CBBI for short, which stands for the Colin Talks Crypto Bitcoin Bull Run Index. I know it's a very long name, so CBBI. And after that first video, this has been a very highly requested video to follow up on what the current metric is. So I know it's been a little while, I apologize for the lapse, but it's been about 6 weeks since my original video, but I've now updated the index. And for those who are new, an index is an indicator based on a portfolio of metrics. And that's exactly what the Bitcoin Bull Run Index is. I've taken 8 of what I consider to be the top Bitcoin metrics, and I've averaged them into an index. And I'll show you exactly how I'm looking at these metrics because it's a little fine-tuned. I'm really trying to be super accurate and nuanced when I look at these different metrics. And one of the most common questions I get when I do my Bitcoin bull run predictions and my price modeling and my forecasting is how long will the Bitcoin rise continue before we see a substantial drop? Do you have a prediction? And I really think that that's the $1 million or the million Bitcoin question is, when will the peak be and how do we know when we're there? And this video is my best effort. I think of all the videos I've done, this particular metric is my best effort at giving you the answer to that question as I see it. This video is not financial advice. I do not recommend you buy, sell, or trade based on the content of this video. This is simply how I'm looking at the bull run, and this is my personal best guess at when we may see the peak using this metric. As this other user said, my biggest fear is not a bear market, but to sell too early. And I think that's a very valid concern because there's a legitimate issue with selling and taking profits if you plan to get back in the market. Let's say, for example, you sell at $50,000. Thinking that you're taking profits, and you very well may be taking a very good amount of profits. However, if Bitcoin never again goes back down to $50,000 and you buy Bitcoin in the future, let's say it's $70,000, you actually just sold low and bought high. You're supposed to do the opposite. You're supposed to sell high, buy low. So if you sold at $50,000 and bought at $70,000, even though it's 2 years apart, so it's not very obvious, you're actually taking a loss on potential Bitcoin ownership. Now, of course, there's the opportunity cost of those 2 years, etc. But I just want you to be aware of that. And I think that's something that not many people have fully taken a look at. You want to make sure that you're not selling too early, as this user is concerned with. A very valid point. So currently, the Bitcoin Bull Run Index, as of February 17th, 2021, that's a typo there, it should be 2021, is 72. And that's out of an arbitrary 100. This is an average of all these different metrics, and we're going to dive into that in a second. Now, just for reference, the previous metric I had given was 63, and this was back on January 4th of 2021. So you can see that it's been 1 month and 13 days. So it's basically been 6 weeks since this last metric. And just in case you did see that last video, you might be thinking to yourself, wait a minute, wasn't it 59 and not 63? And you are correct. I did make a few final tweaks to the various metrics and the way I'm calculating this because I want this to be a lasting index. I want this to be useful not only for the current bull run, but for future bull runs as well. And there was a couple of things I needed to tweak to make sure it was more lasting. And the changes that I made are right here. I added the Pi cycle top, and I'll show you that in a moment, and I removed my 2 Bitcoin bull run proportions projections because those were based specifically on the 2013 to 2017 Bitcoin price cycle, and I do not want to forevermore compare to that particular bull run. That bull run may not hold true for every future bull run. I'd rather be dynamically basing the index off of statistics and metrics that are not on a fixed bull run. And so that is why I removed those 2 and I added the Pi cycle top by user request and because I took a look at it and it looks like a really good metric. So thank you for suggesting that to me if you were the one who did it. I've added it to the metric now. And I understand the importance of keeping an index like this constant. So I do not plan on changing these anymore. I really am going to try my best to keep it the same. I want this to be as rational and analytical of a representation of the bull run as possible. And I know that you can't compare a metric from point A to point B in time if you keep changing the formula underneath it. So I'm going to be keeping the formula the same. And in this case, all these different metrics make up the formula that is the figure that we have currently today, February 17th. 72 is the confidence level that we're at the peak. So we're up by 9 points on the CBBI from January 3rd to February 17th. And what I'll probably do is once I have enough of these data points, which I'll plan on updating at least about monthly, is I'll start plotting them on a chart themselves. So then we'll have a graph of the CBBI figures, and you guys can take a look at that. So this is where we're at. Now, if you want a breakdown of how I came to this figure, stay tuned for the rest of the video. There is one user who actually is attempting to automate this, because I think one of the most common requests I had is, can you give us a website so we can refresh the page and view the CBBI in real time? Now, as you're going to see, it's a very manually updated index figure. But like I said, there is a user who is attempting to do this automatically. He's got some of it automated and some of it still manual. But when he's got that pretty well sorted out, I will share his link in the future videos so that you can then have a dynamically updated page, hopefully in real time, which would be really incredible. Also, if you're someone out there who knows how to program that sort of thing, and you can take these metrics with how I've presented them and put them into an automated web page, I will be happy to feature your site. If it's accurate, and I'll double check it and vet it myself, but if it's accurate, I'll be more than happy to share your website creation on my video and have a real-time CBBI update for everyone to take a look at, because it was a highly requested feature. So with that being said, that's sort of part one of this video. Now we're going to enter part two of the video, which is we're going to look at each one of these charts, and I'll show you how I came to these metrics. So we're going to start off with the golden 51-49% ratio. And basically this is saying that from the market low of every cycle, like here's a cycle, the market low starts the 51% box. And the halving event starts the 49% box. So you can see the purple here is showing the halving events, and the green arrow is showing the market cycle bottoms. So in the current cycle, see, this was the 2013 to 2017 cycle. In the current cycle right here, you can see that we are this blue dot here, and basically I take the percentage distance from the start of the bottom of the cycle to where we are of the total anticipated 100%, the 51% plus the 49%. And so far it's held true for the past 3 bull runs. So if you take this into consideration, we are currently 77% of the way through this particular golden 51-49% ratio cycle. All right, moving on, we have the Bitcoin Google search trend term. So this is the frequency with which the Bitcoin trend has been searched on Google. And needless to say, this trend increases rapidly toward the end because everyone's trying to buy Bitcoin or everyone's trying to search about Bitcoin. It's a hot subject on Google because toward the end of the bull run cycle, it's basically pure FOMO. Everyone's FOMOing in, everyone wants to buy it, everyone's talking about it. And I calculate this metric by taking the previous bull run peak of 2013, this was $1,150, and I take the Google search trend term percentage of that, which is about 12.5% here, and I compare that to the last bull run, 2017, where Bitcoin hit $20,000, and you can see that it's about 12.5% of that peak. And I think that it does have validity, especially with how rapidly it climbs toward the end. It's a real sharp and sudden indicator as opposed to something a little more gradual. And I like how this weights the average of the metric because it does have this very obvious, very telling indicator of when we're at the peak. And actually this red line here, if we zoom in on this right here, this peak, it's actually made up of 2 peaks. These are the Google search trend term for Bitcoin. It's actually 2 peaks almost exactly surrounding the actual Bitcoin price peak. The Bitcoin price peak was right here in the middle. So this, I feel, is a very, very accurate metric for determining when we're close to the top because we had 2 Google trend search term peaks right around that. So the way we do this is we take where we're at today, which is right here, 47% of the last bull run peak. But the way we have to do it is we have to assume that the actual peak is going to be way up here because every time the new bull run peak happens, it pushes the chart down. This peak right here will become like this peak right here. And this peak, this future peak up here, will become like this peak. It'll be 100% on this chart. It's an arbitrary figure, 100% equals the top. So I think it's pretty safe to assume that when we hit the next bull run peak, it's going to be quite a bit more searched for than it was in 2017, just purely based on hype and pumping and fundamentals. So when that peak becomes the 100% peak, this is the figure we'll have is this 47% will push way down here, and basically currently 47% of the 12.5% compared to the future peak is currently 5.875%. So 5.8% is where we're at on the Google Trends search term. Next, we have Plan B's stock to flow chart, very famous chart here. And I'm not going to spend too much time on this, but basically we take this blue line, which is the stock to flow 463 days average, and you can see that it sharply kind of plateaus every time there's a halving event. And for example, the last halving event was in May of 2020, which is right here, and then it moves up to the new plateau point. So there's an overshoot period. You can see that the Bitcoin price doesn't reach its peak at the actual plateau of this blue line here, this stock to flow 463 days average line. It actually overshoots it by this distance, this period right here, and it's consistent through the whole stock to flow cycle. So again, I'm assuming for that same overshoot period. So I don't expect us to see the peak here. It's actually going to be closer to the end of the year of 2021 where the peak will be. So the way we get the percentage on this chart is we take the distance from peak to future peak, which is represented by this blue bracket, and we take this current dot, which is this orange colored dot, and we say how far are we along this horizontal path from start to finish. And currently, we are 82% of the way across. So right here, 82%. Okay guys, next chart. This is the Pi Cycle Top Indicator, and this is the new chart that I just added because I do love it so much. And what we have here is a green line and an orange line. And the green line is represented by a 350-day moving average times 2. And the orange line is a 111-day moving average. And what I did is I took a look at this through the entire Bitcoin history, and I noted what are the widest divergences between those two moving averages. And I found that it was actually a constant. This is the same in 2012 as it was in 2015, as it was in 2019. And so when we've hit peaks, you can see there's these little dotted red lines for every peak. And every time we've hit a bull run peak for Bitcoin, those lines have crossed. The green line and the orange line have crossed. And so when they cross is when there's zero distance between the green and the orange line. So it's the exact opposite of the furthest distance. So I take the furthest distance, this constant blue line, and I consider that to be 0% toward the bull run. And I consider the crossing to be 100% toward the bull run. It's sort of an inversion for our purposes. So currently you can see the distance has been closing in rapidly because Bitcoin has just hit like $52,000 as of today. And I zoomed in on the chart right down here. So again, here's that constant bar, and we take that as the maximum divergence. And then we take the current divergence, represented by the distance between the green and the orange moving averages, and we take a percentage of that out of the max divergence. And we can see the current divergence has shrunk by 90.3%. So this metric is saying that we are 90.3% of the way to the peak, to the point where the green and the orange lines cross. So that's the 90.3 on the chart right here, the Pi Cycle Top. Okay, moving on to metric number 5, the Bitcoin Investor Tool 2-year moving average. All right, now this metric, again, I did a bit of a unique way because I'm trying to think on my feet with these graphs. I'm not trying to be robotic about it. I'm trying to say what makes sense. And this chart, first of all, has two lines, a red line and a green line. And again, these are moving averages. So the green line is the 2-year moving average. That's the average of the price on any point on this line back 2 years. The red line is the same exact line, but times 5. And it forms a channel. Anytime the price has gone below this green line historically has been a good time to buy. Anytime historically the Bitcoin price has gone above this red line of this channel has historically been the correct time to sell. And so we want to know the next time that we're getting close to the peak. Now I actually noted that the distance of the peak is quite a bit above the red line. So we don't want to just use the red line as the time to sell. And also I noticed there's a decreasing amount of distance that peak is above this channel. So here we have a 45% distance above the entire channel. And here we have a 43% distance on this peak above the entire channel. And you can see it's a little bit less than that previous peak. And then you come way over here to this most recent peak of $20,000, and you can see that it's dropped down to a 29% peak. So we don't want to take the same distance above that red line every time. I actually want to recognize the decreasing nature above the red line over time. And so I would approximate that this time around, we're probably going to see something around 20% above that red line. And so that's what I used as my guiding metric. I took a 20% distance above the red line, a 20% distance below that green line, and basically our progress is 85.6% right here of the distance between that 20% below the green line on its way up to 20% above the red line. And so we're 86% of the way through this 2-year moving average. Okay, next up we have the Trololo trend line chart. And here it is. This is from Mark DeMessel. He created a logarithmic differential chart, and I really like this. And basically this shows the logarithmic curve mathematically that has perfectly followed the bottom and the average of the Bitcoin price cycle over its entire history. So just mathematically it has proven true thus far. So we're going to take a look at this. These are actually the same charts, just that one of them is showing the percentage of change and one of them is showing the market cap. And what I've done is drawn a green trend line crossing the peaks. Again, I'm trying to take into account the changes from bull run to bull run. Every bull run is not the same percentage of growth. And I think that was one of the things I learned from doing my previous price forecast videos, is I can't just assume they're all going to have the same percentage multiplier, because they don't. And so I want to take a look at trends over time. And again, this is the entire history pretty much of Bitcoin since 2011. And so if we take that trend line across the peaks of the highest points of the Trololo trend line, we can see that we are currently 62.5% of the way from the current cycle's bottom. And I took the current market cycle's bottom, this is about $3,300 for Bitcoin, and I've taken where we are currently, and we are 62% of the way to where we would be if this trend line continued at the end of 2021, basically the very beginning of 2022. And so that's where it puts us for the Trololo trendline chart. Next up, we have the NUPL chart. Show me your NUPLs, also known as the relative unrealized profit loss chart, the RUPL. But I can't say show me your RUPLs because that doesn't really make any sense. So show me your NUPLs. Again, I'm drawing a trend line across the peaks. I'm drawing a trend line across the valleys, most of them exempting this outlier because it just is so ridiculously low. And this chart is showing basically the cycle. So you see this blue line in the background is the Bitcoin price, and then the red line is the RUPL or NUPL line. Those are interchangeable terms. So this chart is broken into color-coded sections. So this is the capitulation phase, this blue section. Hope and fear is above that, optimism and denial, and then greed. And so we want to know not only when we're in the greed phase, because as you can see, we already are in the greed phase. We want to see when we're at the selling point in the greed phase. So that's what this top trend line is going to help us find out. And so in 2021, at the very end of the year, right here, this is where that trend line hits. And this is where we are currently. And so we're 95.3% of the way up to that peak, a lot closer on this chart than some of the other charts. And this is why I average metrics, because some are going to be more accurate than others, and none of us really knows that. So we use math and we use averages to help us remove our own human errors, our own human bias, our own injected assumptions. And so again, 95.3% on the NUPL/RUPL chart. And lastly, is this lastly? Yeah. And lastly, we have the Puell multiple. The Puell multiple is a metric that shows us, again, when we're at relative highs and lows of the cycle. If we're in the blue band down here, it's historically been a good time to buy Bitcoin. And if we're in the red band up here, it's historically been a good time to sell Bitcoin. However, once again, it's a pretty wide band, and the Puell multiple peaks are decreasing over time. And so we don't want to just assume it's going to be this flat band forever. I'm going to actually take a look at the trend line across these peaks, plot it over to 2021 at the very end of the year, at the beginning of 2022, just like the other charts. And we're going to take a look at where we're at today with the Puell multiple from the bottom of the trend line here. And we are currently 75.7% of the way up to the top of where we could be when the actual highest point of the future peak is reached. And that, my friends, brings us to the conclusion of this update to the Colin Talks Crypto Bitcoin Bull Run Index. Those metrics are what make up this index, and we are at 72 out of 100. Just 6 weeks ago, we were at 63 out of 100, and so we have climbed by 9 points. Please subscribe to my channel if you haven't already so that I can keep you informed with future video updates on not only my Bitcoin Bull Run Index, but also my Bitcoin price projection videos. And I'm going to do my best to take profits on the way up. And I'm going to be doing some cash out strategies as well when we get closer to the peak. And you don't want to miss that. So please subscribe. Please hit the bell icon so you're actually notified when I release a new video. Please share this with your friends on social media if you found this useful. My only real request making these videos is that I want to reach more people. And so if you like this video and you leave a comment, YouTube takes that into account, and actually with enough likes, it will start sharing it to a wider and wider audience. And that's how I break out of my current subscriber base and actually reach new people. It's when people like you friendly people, hit that like button and allow me to actually reach a new audience outside my existing one. So thank you so much for watching. That's the only pay I ask. Hit that like button and have a fantastic day. I'll talk to you again soon.